Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, Phil, we're recording this during the big freeze. Have you got multi-layers on?
Yeah, I got the heating on. Yeah.
You can afford to put the heating on.
Energy bill's going up. Yeah. I think, you know what? I'm not messing. I'll just put it on. It's fine.
Heating during the day. Woof.
I know. You can see that. You can see the needle turning, can't you? As you think about it.
You can,
It's not good, is it?
But
no. And there'll be people listening to up in Scotland saying that's not cold weather.
Yeah, exactly. Somewhere in Scotland was down to minus 14 this week.
Yes,
I saw.
Yeah. We're only -9. I think we've had the lowest, and I think it's about -4 as we -4 or -6 as we're recording there. So yeah, I mean, the Scottish colleagues and listeners will be going, "That's not cold."
No.
But no, it's a bit chilly, but I think it's quite nice. We've got the sun and the frost, haven't we? So it's quite nice. So we'll be moaning about the rain when we get it next week, won't we? So
we will indeed. Yeah.
About the weather. But we've got a few shout outs this week, haven't we, before we get on to this week's headlines that has got a bit of a theme, but we'll talk about that later.
Yeah, we're joined in the second half by Stephen Whitten for a Men-able moment. Steve's actually back from his winter sunbreak, and we'll be discussing some easy steps to achieve mental wealth in the workplace. So do stay tuned for that.
And next week, we'll be joined by CAP HPI's Director of Valuations, Devon Martin, for the first one of 2024, giving us the full lowdown on used car valuations have performed in the month of January. And as always, he'll be sharing some of his thoughts around the views on what's coming up in the weeks and months ahead. And Darren this week that shared that the drops had stabilised at just down 0.4% by the middle of the month, saying that retailers have got off to a decent start with the market looking more positive than it has for months. So don't miss up the update from Darren for the full month of the special interview there with Darren next Friday.
Headlines this week come from the Times, Auto Retail Agenda, AM, and Motor Trader. Starting with really the big story of the week, certainly since we put out last week's podcast, is new FCA clampdown on motor finance could see lenders facing £10 billion compensation bill. Could this be another PPI, we ask?
Say PPI, Dieselgate, PPI, you know.
We've been there before, haven't we?
Just a few times.
Staying with finance, new car finance sales fell in the 11 months to November, according to the FLA. Fleet salary sacrifice sales take off as company car drivers snap up EVs. Another dealer group ends Sunday trading for better work-life balance. And finally this week, the dealership employees like so much working for, they've decided to buy it.
Yeah, I wonder if everybody feels the same about that.
Yeah, there's a few listeners nodding their heads at the moment, thinking, "Oh yeah, we could do that."
I think there'll be some owners that are probably happy to sell to their employees, possibly at the minute as well, but we won't go there. So, as Curtis has said there, that the first story, we are heading over to the Times, that lenders could face 10 billion compensation bill over car financing. And this is the FCA is investigating historic car finance loans amid concerns millions of consumers have been missold unfair deals. Now, this, I think, is all about the Finance Commission, isn't it? And the focus on enticing sellers to sell certain financial packages.
Yeah, it's the discretionary commissions that we've discussed many times on the podcast. They were actually banned by the FCA in January 2021, but there's been a lot of complaints to the financial ombudsman, and this is really what's triggered the FCA to look closely and investigate the way that finance was sold in the period up to after January 2021. It's this one's really been sort of brewing under over the last few months. There's been reports, certainly in the national press, about a possible investigation, and there's been comparisons drawn with the PPI scandal that we mentioned earlier, and it does look as though it's coming to fruition. The piece in the Times is very, very interesting. It was only published midway through the week, so it was after the initial reports first broke. But there's an interesting element in it, because it says that two cases have actually already been resolved. Two claimants have both received £1,000 each after it was found that they were sold finance at a higher APR rate than maybe they could have been sold, and they've both been compensated £1,000 each, and that's the level of the commission rather than the overall payment. So that might just give us a benchmark for how big or how small these payments are going to be if they go through.
Yeah, and I think those two decisions that the FCA had done, that was with Lloyds and Barclays, and that they were ordered to refund two borrowers more than £1,000 each in excess of interest payments that they had made, compared to if they'd been charged a lower rate. So it looks like the early payouts is that they're giving the consumers that commission back, aren't they? The monetary that they were overcharged at the time, giving it back to the borrowers. But you can just see where this is probably more of a small claim payouts, but in a volume perspective, because some of the numbers that they are talking about are pretty eye-watering, aren't they?
That they are, because within the story they say that more than 16,000 complaints have been made to the Financial Ombudsman Service since September 2022. Many have been brought by claims companies that believe undisclosed commission could be similar to what we were saying on PPI, which cost the banks, the PPI scandal cost banks £38.4 billion. So that is just huge, isn't it?
It is. Yeah.
We don't envisage that happening in car finance, but this is pretty serious stuff. And the FCA has hinted a couple of times that it would take a closer look at the way that finance was sold. And certainly this week, the Martin Lewis program on ITV, he did a segment on the car finance, the way car finance has been sold, and he was giving top tips, and he was encouraging viewers to put their complaints in now. So that 16,000 that we've seen into the Financial Ombudsman, I should imagine that's gone
Could
up.
accelerate after
Yes. Just this week.
Yeah. I think when Martin Lewis does share things, it does tend to accelerate it a little bit in the consumer sector, doesn't it?
It does. Websites start crashing and action starts to be taken. So this is a story that we'll be coming back to. The investigation from the FCA, I think I read somewhere that it's likely to go on for over 30 weeks. So this, because the FCA are looking at it so closely, it's very much in their target now. That they will see this through, and we will see some sort of resolution and payments from this, I think.
Yeah, and moving over to auto retail agenda, and this is still sticking with the new FCA clampdown on motor finance, but the more sort of dealer led as you'd expect from auto retailer agenda. So this is that is saying that motor finance sales are to come under the new investigation we've just been talking about there by the FCA, which has said it will use its powers under the Financial Services and Markets Act to review historical Car Finance Commission agreements and sales. So they do go into a little bit more detail around the commission ban and what's involved and talk about it more from a dealer perspective, don't they?
Yeah, and there's more detail in this, and it's definitely worth heading over to this story. If you are in the car finance selling world, the FCA now predicts that there'll be a significant increase in complaints from consumers. And it is therefore immediately pausing without consultation this 8-week deadline for firms to respond to customer complaints. And this is something that Martin Lewis touched on, and he did encourage viewers to get in before that is lifted. And this pause, according to the Auto Retail Agenda story, this pause will last for 9 months. So customers will also now have 15 months to refer complaints to the Financial Ombudsman rather than the usual 6 months. So you can see where this volume of complaints is now going to grow and grow and grow.
Yeah, and they're saying that that's to obviously prevent the disorderly, inconsistent and inefficient outcomes for consumers and knock-on effects on firms and the markets while they assess the issue and determine the best way forward. So I think we're going to hear a lot more of this as it sort of progresses, and like I say, we'll surely start to I don't know, we're going to start to see all the PPI equivalent claims as we did with Dieselgate, etc. These I can't remember what you call them now, where they sort of jump on the back of it.
Ambulance chasers.
Yeah. So
they're these claims companies, aren't they? And encouraging you to join up, and they'll handle the claim for you. And they have had a lot of success on the back of PPI. So I think you're right, Phil. This is a story that we'll be returning to pretty much on a regular basis this year, I suspect.
I do, yeah. And I think we'll try and get Adrian Daly on from the FLA at some point, who might give a little bit more views on that from an FLA perspective. And speaking of the FLA, their November figures, and say November, it seems a long time ago when you start talking about November, because it's November 2023, which is then last year. But there is always a lag with the FLA stats coming out, because it's a rolling 12 months and a rolling 3 months when they do come out. So we're talking about the November figures. Now, this is covered in both AM and obviously directly on the FLA's website, saying that new car finance business fell by 7% in November. And this is that talking about the consumer car finance new business volumes fell by 7% in November 2023, and that's compared to the same period month in 2022. But yeah, I mean, it seems to be a little bit of a negative performance throughout the 12 months, rolling 12 months to November last year, and for November standalone when you look at it year on year for new and used vehicles.
Yeah, because certainly with new finance, the corresponding value of new business was 5% lower over the same period. And in the 11 months to November 2023, new business volumes were 6% lower than the same period in 2022. Looking at used car finance, also reported a fall in new business in November of 6%, both by value and volume compared with November 2022. And in the 11 months to November, new business volumes for used finance were 6% lower than in the same period in 2022.
So not a great reading, that really, is it, for,
No.
for the finance side of things. So yeah, it's one that we could, again, be interesting to see how that progresses through sort of 2024, because 2024 is being reported as a fairly flat, stable year with everything that's taking place. And it'll be interesting to see how this finance whether it starts to stabilise once we get the the next lot of figures from the FLA. But the FLA is saying that better news on inflation and interest rates has provided more certainty for consumers, but the adverse impact of previous rises in these measures on the household disposable income means consumer spending is likely to remain subdued in the near term, and that the FLA's Q4 2023 Industry Outlook survey suggests that 70% of motor finance respondents, including fleet, expect some interest in new business over the next year, which was obviously, and that's down from 73% that cited that in the third quarter last year. So a little bit of optimism there that they're expecting new business to increase, but slightly down in terms of those that responded, expecting that to increase over the next 12 months. So one that we'll keep an eye on. And like I say, we'll try and get Adrian Daly on at some stage to talk about the figures with us.
Yeah, and we'll return to that theme of fleet finance in another story after the break. But we're back with more industry headlines after this week's Men-Able moment.
You're listening to all the chatter that matters on Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand, wherever you are, and on your podcast feed. Next up is our latest Men-Able moment, looking at mental wealth and well-being awareness and best practice in the automotive sector. With me, Stephen Whittam. Yeah, hi everyone. It's Men-Able Moments time again. Good couple of weeks into the new year now, so I'm not going to say Happy New Year again. Back from my travels, no trundling suitcase wheels in this one. Instead of sun and sea and sand, I'm actually staring out at cold, frosty outdoors. So, how things change in the space of a week or so. Anyway, cough and cold virtually gone, so all good on that front. And as always, let's have a little chat about well-being and what's going on across our industry. Now, in the last Men-Able Moments, I promised you that over the next few weeks, we'll be sharing our 5 critical success factors for achieving mental wealth across your business. So let me give you a quick rundown of what those 5 are. The first one is management commitment. The second one is communication. Third is training. Fourth is recruitment. And the final one is purpose. So, as I said, over the next few weeks, I will be giving you a quick sort of insight into what each of those mean. But what I can tell you is that we use that as a little bit of a framework with dealers and automotive businesses that we work with. And it really does generate some amazing conversations and some differences of opinion, different views. And of course, off the back of that, some great action plans and some opportunities to move forward. So if you want to have a chat a bit more about that, you know how to get hold of me, and I'll put my email address out again at the end of this. But I want to talk, going to skip across one actually to recruitment. And that's really about making sure that when you recruit individuals into your business, that they have a very, very clear idea of who you are and what you're about and what they're joining, and that the business that they're joining, that the values and everything else is aligned with what they expect. And, you know, I know that might sound a bit warm and fluffy, but it's very true. And since the pandemic, I think lots more people are actually really starting to think and evaluate about what's important for them and what's going to help them with their well-being, as well as, of course, the obvious of, you know, what do they earn and what are the benefits and all of that. But I think increasingly well-being is higher up on that list for people. Now, I'm going to share with you an example, and this isn't meant to be a criticism, but I get people writing to me quite often saying that they've heard a conversation or they've witnessed something being said or done in an automotive business and just asking me for what I think. And I'm going to share one with you that I got earlier this week from a friend of mine who said that he'd overheard a manager in another business, it just happens to be a sales manager in this occasion, who was bemoaning the fact that, in his words,
you can't get decent people anymore because no one wants to work 6 days. And was then went on to say that he's shocked that people don't want to work on their day off because they're not hungry enough. And I'm just going to pause a minute and let you dwell on that. And while I do that, I'm going to take a call from 1984 who want their archaic management attitudes back. Because the reality of it is, that's the world I grew up in. And that's the world that contributed to the stress and anxiety and all of the things that, according to Ben's recent survey, are the reasons why a good proportion of people, like in the high 90% in our industry, are at any one time suffering with stress, anxiety, depression, and all the stuff that comes with working under pressure. So I think we've got some work to do. And in the area of recruitment, I've been dwelling on the fact that there are still managers out there, that I get this comment a lot, some managers who believe they can recruit the right person for their business in a 5-minute interview. Well, I don't know about you, but I've never been able to do that. I can suss someone out fairly quickly and get a good first impression, but whether they're a good fit for my business in 5 minutes, in the past when I've done that, guess what? It hasn't really worked out that well. So these are the same managers who, when we go further around the wheel, when we start talking about staff turnover, say that their attrition rates are very high. So what I'm trying to do here is help you join up the dots, really, if any of this applies to you. So let's start thinking about this, from a perspective of mental wealth across our industry. Let's start thinking about what we need to do. And if I was to boil all of what I've just said down into one phrase, it's culture change. It really is culture change. Now, I know for some people that's scary and it's shocking and it's like, oh my God, I don't want to change my culture. There's nothing wrong with my culture. Well, no one's saying there is anything wrong with your culture. It's just saying that if we want to have an environment where we have mentally wealthy people who are working at their optimum, but without being overstretched, burnt out, and all the rest of it, we do genuinely have to take a look and step back and think what's going on in our business. And our observation is 9 times out of 10, that involves looking at culture. And part of that is attitudes of the like that I've described, with this manager talking that he can't get decent people because no one wants to work 6 days or work their days off. And I'm not sure that's the kind of culture that's going to be sustainable for our industry going forward. So anyway, as always, if you want to have a chat about any of that and you want to take a look at what's going on in your business, and as always, as I said, we don't do that from a critical point of view, but from a point of view of observing where can we go forward to help you get mentally wealthy people. Because as I've said a few times, people perform well when they feel good about themselves. So I'll leave that with you. You know how to get hold of me, stephen.witten@menable.org, and we will catch up again soon. Take care. Have a great one. See you soon. Bye.
1984.
Yeah. I remember 1984.
I do, yeah. I'm just wondering where he got that date from. I wonder if he's been watching, is it Wonder Woman 1984? For some reason, it sprung to mind, but maybe I've going off at a massive tangent there, Curtis. I won't go there.
It's funny. It's funny. You were thinking Wonder Woman. I was thinking George Orwell. So
yeah, that says something, doesn't it?
Yeah, I think it probably does.
I wonder what Steve was thinking.
Yes, we will ask.
I'm not sure I want to ask.
We'll find out.
Yes,
yeah.
I may ask him. Yes, but interestingly, we will get on to a story shortly, which kind of links into that a little bit in terms of that what Steve was talking about. And there's a lot going on at the minute, and in that dealer space. Quite interestingly, I was watching something this week, Curtis, that over in the US, the dealer group that have actually put a doctor's pharmacy within their business so that the employees and customers can do like doctor's checks and pharmacy whilst they're
Right. Yeah.
in for servicing and things
Yeah.
like this, or their employees can, or employees' families and things like that. And it's a third party; it's not the business hasn't done it, but it's all about that giving back to the employee and the customers and things like this. So it's it's quite an interesting concept coming out of these kind of things now.
Yeah, that's an interesting one because having visited quite a few American dealers on various NADA trips, I mean, the sheer scale of those businesses, an individual site could actually employ hundreds of staff. So it does make perfect sense, doesn't it, to offer that for staff and customers. Whereas I should imagine listeners tuning into this will be thinking, what?
What's that? Yeah.
We haven't got space.
Can't get them to work the days off.
Yeah.
What's this world coming to? But yeah, as Stephen said there, if you do need to get a hold of him, he's more than happy to have a conversation with you. And it's Stephen with a PH .Whitton, that's WHITTON at Menable MENABLE.org, or you can find him easily on the social channels, particularly on LinkedIn, or you can check out the website, which is menable.org. And Steve will let you know what he's up to and where he can help your business if you want to.
So heading over to Fleet News for the next headline, which is huge growth in salary sacrifice as half of company cars are pure electric. This is based on some research done by the British Vehicle Rental and Leasing Association, which has found that salary sacrifice schemes actually grew by 68% year on year in the third quarter of 2023, with a 12% uptick on the previous quarter. So it's showing the momentum behind salary sacrifice. And what's particularly interesting about this story is that they've also looked at the increase in business contract hire orders. So it looks as though a lot of these salary sacrifice schemes are ending up funding business contract hire finance packages as employees take the money and use a company-sponsored scheme. So, and of course, what are they choosing? They're choosing EVs because of the preferential BIK advantages of driving electric rather than ICE. So interesting one, this, isn't it, Phil?
Yeah. Maybe someone was saying that's what you should be getting, Phil, with your car, and then you have to incur the £310 tax levy that's on a car less than 5-year-old and over £40,000. But no, but no, it is interesting, this, and I think this whole EV, and we talk about the growth of EV and it's being in that fleet and business sector, be it as a company car or through a salary sacrifice, but those salary sacrifices where they are choosing to do a business contract or business lease as their option of ownership, it gets around that layout of the cost of the vehicle whilst benefiting from your salary sacrifice money, and you get the benefit in kind in terms of that tax saving as well. So you can see why this is continuing to grow in that EV sector, can't you? But I have had a couple of conversations with colleagues recently where some of them actually opted out of their company cars, gone into whatever car they're driving, and actually considering going back into a company car as an EV because it's so financially beneficial for them to do it, and obviously you can get such a good car for not for your money as a company car, because the company also benefits as well as yourself from that benefit in kind taxation scheme. So yeah, you can see where the growth is with this and why it's starting to grow. And I think as you get more cost efficient entry points to the EV sector, you can see where this will continue to accelerate, can't you?
Yeah, definitely. Especially with, I mean, we've talked about the zero emissions mandate and how that will impact EV sales this year. So there's going to be more EVs available on the market. And we've already mentioned this, that a lot of them are going to be pumped into the fleet sector. So from this research alone, bearing in mind that this was last year, the business contract hire market in the 3 months from July to August accounted for 47% of deliveries being EVs. So 47% of vehicles were EVs, followed by plug-in hybrids at 25% and hybrids at 7%. And then you look at the ICE vehicles, and petrol and diesel represented just 15% and 4% respectively. So I think we're going to see an influx in these business contract hire contracts, deals, financing new EVs over the coming months. And as salary sacrifice, if it does grow, that's going to give it extra momentum there. And for dealers, what does this mean to dealers? A lot of these employees are going to be going into dealerships to check out EVs, to test drive them. So, they'll be doing a lot of their groundwork, a lot of their research in dealerships.
Yeah, and it is. I mean, I was again talking to someone recently that has got a business around the Milton Keynes area, which we know is it very much heavily invested in EV and even hydrogen down in that Milton Keynes. But the amount of company car drivers that are now either in a new or used EV as their vehicle of choice, they say is it's very high now. That because it just works for the employee, because they've got the infrastructure around them, because the availability of the stock, whether it's new or used, they're switching into an EV because of that cost effectiveness. And I think the BVLA do go into other areas around the service maintenance, the repair, the SMR, because they talk about that obviously since this transition to BEVs has been obviously facilitated now by the return to vehicle supply and easing of delivery lead times. But they're saying that it has instead been replaced by the perfect storm of parts delays and technician shortages combined with the increased downturn for service, maintenance and repair work. And that over nearly 900,000 vehicles, 64% of the leasing fleet, are now provided with service packages from the leasing companies. So the leasing companies are reacting now around this, putting those service packages with the cars on a battery electric vehicle to come over any service or maintenance or repair issues that they may face from delays in that aftermarket. So there's a lot going on in that fleet sector at the minute.
Yeah, no, definitely. And next story is from Motor Trader, and it really returns to that theme that Stephen Whitten was developing within Men Able Moments. The headline is Sherwoods ends Sunday trading for better work-life balance. So this is Sherwoods Motor Group, long established family-owned business operating 4 sites across the northeast. And what they've announced is that they will be giving employees the Sundays off. They will not be open for business on Sundays. So Sherwoods employs 150 staff and has made the move as part of a strategy, it says, to retain and attract the best sales staff. So sales managers and executives traditionally work 1 in 2 Sundays, but the company wants to be able to guarantee that they can have every Sunday off, which is why they've made this move.
I like the being from the motor trade background, Curtis, that this paragraph here is that by giving sales staff their flexibility, it means they can plan to be with their families, attend events, or just enjoy a night out on a Saturdays without worrying about work the next day. And they're confident it will result in them being more energized and productive on the days that they are at work. And being from that background, that Saturday night out with your friends, that you sort of saying, well, I've got to go now because I'm up in the morning and I've got to get to work and I've got an hour's drive to get to work and it's a Sunday morning. And yeah, so I sort of resonate with that little, less about the families and events, but I resonate that bit with a salesperson on a Saturday night out thinking
it's
about
the Saturday
Sunday
night, isn't it? Yeah.
yeah. So and you go, I can come out on a Wednesday night because I'm off on Thursdays, and they go, nah, you're right, thanks.
It's a school night.
It's a school night. We don't come out on a Wednesday. Yeah. So no, I mean it is good, and I think, like you say, back to what Stephen Whitton was saying there in the Men Able Moments, it resonates perfectly, and we know that a lot of companies have been making this move recently, haven't they? Even some of the larger groups have made the move to be closed on a Sunday, just to give that time back to employees. And you know what, it's potentially, I think I remember one story that said there's a cost saving as well, because the business is shut and they don't necessarily lose any more business. The customers either go online and they can still reserve the cars online, or they buy the car on the Saturday, or they return during the week to buy the car anyway, because consumers don't necessarily want to be trawling around dealerships on a Sunday.
Yeah.
So yeah, it does resonate with what's been going on.
You make a good point there, Phil, because dealers now they're open 24/7 anyway, aren't they? If they've got a digital presence, that's where buyers are likely to find cars in the first instance. So it's pretty much immaterial if they're closed on a Sunday, because you can still find a day to go and visit the car. And it's interesting that within the story it says that signs at each location will make it clear that visitors are welcome to browse around the sites on Sundays, so they can still come and visit, wander around the forecourts, and all vehicles will have a QR code taking customers to the company's website for more information. And they do follow that up with a member of staff will be on duty remotely, certainly no more than one Sunday in 6, to help with any customer inquiries. So there's still someone at the end of the phone line. So it looks those Sherwoods have taken a really sort of pragmatic approach to this, and doing the best for their employees and indeed their customers.
Yeah, no, I think you're right. I mean, there's nothing to stop a customer going down, like you say, at night time or when it's closed, to have a look at the cars and not be met by salespeople when they're doing it. I mean, I know people do choose to do that. So yeah, I think it's a fantastic move, very pragmatic, very proactive move from Sherwoods to be operating that way. So well done to those guys at Sherwoods.
And finally this week, AM Online, the headline is Helensburgh Toyota dealership sold to employees. So we're ending with a really good upbeat story, aren't we, Phil, for a change?
Yes, yeah. I'm sure not everybody will feel the same, as I said at the start there, but I mean, it's great news. And I think over the years of doing the podcast, we have talked around a few stories where this has happened, where it's such a good business and the owners decide that they want to exit and the employees decide they're gonna buy the business. So it's a fantastic move, this.
Yeah, definitely. So Helensburgh Toyota, they operate 2 sites in Scotland. It's what it's done is that under a new staff ownership scheme, it'll be sold to a trust formed by 34 of its employees. So the dealer has actually held the Toyota franchise for over 45 years. So that makes it one of the longest running Toyota sites in the UK. It's recognised as one of the franchise's top performers for customer care, regularly appearing in the top 5 rankings of dealers, as well as winning 2 European Ishabian awards for customer service. The business is currently jointly owned by Gary Mulvaney and Ernie Cohen, and they will remain in their current roles until March as part of this handover process of what is a £16 million turnover business. And it'll hand over to this newly formed Helensburgh Automotive Employee Trust. And the company also recently completed a £500,000 refurbishment of its service workshop as it continues to invest in the future. So the employees are actually taking over at a really, really good time, aren't they? Because that investment's been made.
Yeah, no, I think it's a fascinating story, and then there's a comment in here from Ernie himself who said that he joined in January 1978. That it's been an honour to help the business grow and thrive, but the time is right for the next generation to take things forward. So, I mean, just the opportunities, and we know that Toyota is a fantastic brand, so it gives them that big opportunity with such a great brand as well, for them to take that ownership. And what a job, what a legacy to leave behind from those two guys to do this and to give that opportunity, because they probably had the opportunity to sell it to somebody else, didn't they? But to give those employees the chance of buying it is great news.
Yeah, and it just means that this long-established brand in Scotland will continue, and it will continue under new ownership. And as you say, if it'd been bought out by someone else, chances are the name may have disappeared. So there's a really good outcome here.
Yeah, definitely. But that's it for this week. So very much a topic of finance there, and a topic of employees and doing the right thing from a business perspective with their employees. So it'll be interesting to see what Steve comes up with in a couple of weeks' time on his next Menable out of his 5 statements for 2024. Is what he'll pick next to talk to us about. But that's some great stories this week, Curtis.
Yeah, but we can't guarantee that we'll be able to theme the rest of the show around whatever he chooses next time. So.
No, so that was a bit of luck, that one. So,
yeah, it was. Yeah, the stars were perfectly aligned. But you know what, Phil, that's all for now. So many thanks for joining us on the Motor Trade Radio podcast. We're back on Friday with Cap HPI's Darren Martin talking us through January's used car values trends. So until then, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.